Good evening, everyone. Welcome to State Society of CPAs offices. I'm Paul Becht, and I'm Vice President of the New York State Society of CPAs. This evening, I'd like to welcome you to what will be the first in a quarterly series at the New York State Society that explores controversial topics confronting the accounting profession with thought leaders, regulators, and professionals most affected by these changes. I'd also like to welcome those of you who are joining us this evening via Facebook. For 70 years, the audit report, with its pass-fail boilerplate language, has remained unchanged. The financial crisis, however, shined a light on just how limited the usefulness of this model can be for investors and the public. In response to calls for enhanced transparency and more relevant reporting, the PCAOB in June approved the new auditor's reporting model. 6 years in the making, this new standard introduces dramatic changes to the audit of public companies, not least of which is the inclusion of what are called critical audit matters, which highlight particularly challenging, subjective, or complex audit judgments that are discussed with the public company's audit committee. To explore the implications of this seismic change, we present to you this evening a distinguished panel representing diverse perspectives on this topic, which is moderated by Chris Gaetano, the trusted professional. Before we begin, I invite members of the audience to ask any questions that they have by using the index cards that are on your chairs. And those who are joining us on Facebook Live, please ask your questions in the comments. You can then take those who are going to submit questions on the index card. Someone will collect those in a few minutes. So please look for someone who will come around the room. We'll reserve the last 15 minutes for questions from the audience. So thank you, everyone, and I'll let Chris take it away.
All right. Good evening, everyone. I'm Chris Gaetano with the New York State Society of CPAs, trusted professional. On June 1st, the PCAOB approved the new expanded auditor's report, the first major change to the standard reporting model in decades. While retaining the traditional pass-fail model, it introduces the new concept of critical audit matters. This new addition, though, has raised some questions on what effects this will have on companies and on the nature of the audit profession itself. Here to talk about what this means, we have a panel of thought leaders involved in the audit, investment, academic, and regulatory fields. Now, allow me to introduce tonight's panelists. Immediately to my left, we have Jeanette Franzel. She is a member of the Public Company Accounting Oversight Board since 2012, who had previously served over 20 years in the Government Accountability Office. To her left, we have Charles Abraham, the Financial Services Practice Leader at Mazars USA and a specialist in SEC filers. We have Jan Herringer, a BDO audit partner with the firm's National Assurance Practice and NYSE CPA's President-elect. We have Jeff Mahoney, the General Counsel with the Council of Institutional Investors, who had previously served as counsel to the chairman of the Financial Accounting Standards Board. And finally, we have Thomas Ray, a distinguished lecturer of accountancy at Baruch College and former chief auditor of the PCAOB. Thank you so much, all of you, for coming over today. So, I guess I would start off with the first question. And to me, when I observe a lot of the back and forth about this expanded auditor's report, a lot of it seems to be rooted in what I would say is a deep philosophical question about what is the purpose of an audit, what is an audit meant to do, and what is an auditor meant to be. And so, broadly, what is your view on these questions, and to what degree does the new expanded auditor's report speak to that? Let's start with Jan. What are your thoughts on this?
Well, yes, I think this question has two parts. One is, what is an audit? And we all know what an audit is here. It's, to get reasonable assurance that the financial statements are fairly stated. So that's what the auditor is doing during the audit, is obtaining audit evidence to be able to provide that opinion. However, the other part of the question, Chris, is that, well, the auditor did the audit. Well, what are they going to report? How are they going to report? And previously, as Chris has mentioned, for the last 70 years, we've been doing, did the audit pass or did it fail? And that was the information we gave to the readers, to the investors. So now the question is, what do investors want today? And today, it seems like they want something a lot more. And I think Jeff will speak to us on that.
Thank you. For quite some time, the investor community has indicated that they find significant value to the pass-fail model, and they have for years. But for many years, they've been asking for something more. And there's been a lot of debate for years about what that something more should be. I was involved in the Department of Treasury's Advisory Council on the auditing profession back in 2007. The report was issued in 2008. They had representation from a broad cross-section of individuals, the accounting firms, lawyers, investors, audit committees, representatives, as well as individuals from companies large and small. And one of the main they had many recommendations in the report, but one of the main recommendations to the PCAOB was to expand the auditor's report. And that was in part the result of input from the investor community, who believed that given all the time and effort that's put into an audit, and the end result is just a pass-fail boilerplate opinion, that they would like to see something more about the audit. The recommendation did not get into specifics as to what that something more should be. However, there were suggestions in the recommendation that one of the areas of particular interest to investors was the company judgments and estimates in financial reporting, and that they'd like to see some insights from the auditors around some of those estimates and judgments.
Yeah, if I might just jump in, excuse me. Getting to the way you set up the question, Chris, I don't necessarily see this as such a deep philosophical question. I mean, if you look at the auditor's report, clearly the number one objective here is for the auditor to express an opinion and provide a basis for people to have confidence that those financial statements are fairly presented. But other parts of the audit report actually do talk about the audit and what the audit is. Okay, just a little bit, right? It's not very much, but it does talk about what the audit is. And I think what we've seen here is you can maybe put your own characteristic on how big a step you think this is, but at least some not so great, some sort of modest increase in the amount of information in the report about the audit. What did the auditor think were the most difficult areas, the most sensitive, the ones that needed the most judgment, and how did the auditor respond to that? So, I don't, like I said, I don't think I necessarily see this as such a huge increase in information.
Yeah, I would just like to agree with Tom on that point. I don't see this as a philosophical point. And we heard from investors, and we heard from all different types of stakeholders that the pass-fail opinion is very important, and that's why it's still going to be there. That reasonable assurance provided by auditors has really been the bedrock of the integrity of our financial system for decades, and so that is still there. The real question is transparency. How much should the auditor say, and how much information do people want from the auditor, from this very, oftentimes it's a long process filled with a lot of work, and PCAOB has been working on this for a very long time. Tom could probably give us some insights. But
started before I left, indeed.
Certainly long before I got to the board, and a lot of progress had been made, and then the Treasury ACAP, the Advisory Commission on the auditing profession, took that up as well. And so this has been around for a long time, these ideas. I think the various iterations that the PCAOB has done has refined this to something that could actually be proposed and tried in this marketplace. And we also see the international market really taking up this same topic of transparency from the auditor, and to what extent will that help investors, and in what form should that be?
And just to add one last thought here, and I think Chris had intended this question to raise a lot of arguments among all of us, but I don't think we'll get there, because of the fact that traditionally what an audit means, we tend to agree, meaning that what the PCAOB has publicly stated in various speeches, and the very mission of the PCAOB is something that most audit firms, I think, I'd like to say all audit firms, would agree with. That our end client is the stakeholders of the financial statements. It's not management, right? I decided I would quote Steve Harris, because I didn't want to quote Jeanette Franzel when she's sitting next to me. But in May of 17, he had spoken to students, college students, and he made the comment, "I encourage you to never forget that the P in your future CPA stands for public." So I think we all agree on the concept that we have that professional responsibility to serve the interests of the public. The one piece that I would caution here, and I think I'll continue to repeat this as the session goes on, is that, as part of the proposal, the reproposed standard, there was a statement in there the PCAOB made that it should help, this expanded audit report should help in reducing the information asymmetry between the investors and the auditor. And my word of caution here in terms of the difference of information that an investor has versus an auditor has in the performance of the audit, it doesn't go away because of the expanded audit report. And I don't think that was the intention, it was to reduce it. And part of the concern is that it's one-way communication. The expanded audit report is one-way communication. And I think the information asymmetry gets further reduced with a dialogue, where good audit committees, really engaged audit committees and auditors, when they're going back and forth discussing, collaborating, that really leads to a good audit, to a well-performed audit with good communication, real understanding of the risks. So that will be my my additional comment here in terms of what does the new audit report do, and what are some of the limitations that we still should recognize, that there's still work to be done here.
So to expand on that, what do you think would be these limitations? Where do you think work would still need to be done in your view?
I won't presume to say what work still needs to be done, but in some of the limitations, I will say that, and I started off by mentioning to Jan that a part of my commentary is really going to be just on some of the initial challenges that audit firms have put up as being concerns with the auditor's report. So one of the items which the PCAOB has clearly recognized is the legal environment, the litigious environment in this country versus other countries. And is it truly, looking at what other countries have done with their auditor's report, is that similar to what we do here? Secondly, we briefly mentioned the dilution of the pass-fail model, and it's very clear that the reproposed standard still keeps the pass-fail model. And in fact, I had shared that I was reading through some of the SAG transcripts, and it talks about that there's a risk here of people looking at the opinion and saying, are these piecemeal opinions? Each CAM, is that a piecemeal opinion of a yes, but? And the point is that that's not where we want to be. So those are some of the challenges that people have talked about in the past. And I mentioned to Jeanette that I was encouraged that the PCAOB has considered it. We are here now, right? We're here now, the SEC, assuming that they approve it. All good audit firms are going to comply with the standard. I think going further than that, what's next? How do we provide value? That's going to be the difficult question going forward.
Yeah, and I'd like to just add to the very good answer that you gave to that very difficult question about, well, if this isn't the answer or the end of the road, what is? And I don't have an answer to that question either, but I just want to put it in perspective. When you talk about it's one-way communication and we need a dialogue and all of these things happen to really help improve audit quality, and investors need to know about that. What we're talking about here is the expectation gap and how to reduce or narrow that expectation gap to an appropriate level. Investors are never going to have all of the information that management or the auditors have, but how can we reduce that expectations gap to an appropriate point? And there are going to be a whole lot of different things that need to be done to help that. Auditor reporting is just one aspect of that. We've got the potential for audit committee reporting and other mechanisms to also help reduce that expectations gap, and clear standards for auditor performance. There's just a whole realm of things. So I think when we're talking about, is this it? And if not, what? We have to remember that this is one small piece of a very big puzzle.
Now, the role of the audit committee had been mentioned a couple of times, and as people know, a critical audit matter, a big part of that definition is that which was communicated with the audit committee. Now, in this respect, since communications with the audit committee is vital to understanding critical audit matters, to what degree do you think this might affect the way that the auditor and the audit committee will communicate with each other? Do you feel that there might be a temptation on the part of companies to effectively stage manage these interactions out of concern of what might end up as a critical audit matter?
Before everybody responds to that, I'm going to do a technical correction to
Okay.
what you just said. A CAM is actually a matter that was communicated or required to be communicated. So if an auditor decides, well, I'm not going to communicate it to an audit committee, then I don't have to consider it for a CAM. That doesn't work. So I just wanted to make that small technical correction before we throw it out to everybody here.
All right, I guess I'll start with that after that technical correction. But yes, I do agree. The communications are the matters that were required to be communicated or were communicated. And given that, I'm not quite sure. I know there's some concern that communications might be chilled because of the communication of critical audit matters, but on the other hand, I know there's some comment letters out there that think that actually the opposite will occur, is that there'll be more robust dialogue between audit committees and the auditors, just because when you're talking about communicating CAM, that's not going to just start that's not going to be begun. That conversation isn't going to start at the end of the audit. It's going to start during planning, when you're starting to look at what happened last year, what you anticipate happening in the current year, and you're going to start planning those discussions and having those discussions throughout the audit. So perhaps, there's no crystal ball. We don't know exactly what's going to happen, but I think there's a good chance that audit committees, good audit committees and good auditors are going to have more robust conversations, and that may be better for the audit and for reporting to investors.
Well, I might just add a blunt statement. If auditors participate in such a scheme to try to manipulate what's a CAM or what is something that needs to be communicated to the audit committee, that's unethical. I'm kind of excited about that because I've been teaching my students ethics the last two classes, but it clearly would be, right? It would be an impairment of their independence and objectivity, and so I would just caution anybody if they think that they're going to try to do that.
And I would agree. There was a lot of input provided to the PCAOB indicating that around these critical audit matters, there likely is to be more discussion, both with the auditor and the audit committee as well as with management. I think that makes sense. And if you look at some of the law firm analyses of the standard and their advice to clients, they are encouraging their clients to actually provide more information around the CAM. So I think to that extent we will see some more communication, some more information around the CAMs. In addition, you look at the UK, and there's been some look at whether there's been a chill of communications in the UK in connection with their similar standard, and to date they have not found any evidence of that.
And I would add that, regardless of what seat you're in, whether you're in the audit committee seat, management's, or the auditor, we should all have the same goal here, and that is integrity in financial reporting, good auditing, and strong capital markets. And sometimes that involves difficult conversations, and it should involve difficult conversations, and there should be a little bit of tension in the system, because if everybody is just perfectly thrilled about having an audit, maybe there's something wrong. But we have to find that right balance, and I think we all have to keep in mind the ultimate goal here.
I'd like to underline one aspect here, which is that I think training is going to be required for the different constituencies. Not all audit committees or auditors are created equal. And, I have one of my audit committees that when the audit quality indicators came out, now that's also another controversial topic, when the AQIs came out, never mind that nothing's been done with them. When at my next audit committee meeting, they had this printed out and went through this analysis with me. And although I reminded them, by the way, this is not something that needs to be disclosed anywhere, they said no, but we think it's good with the respect of transparency and understanding your audit process and your thought process. And I appreciated that. But not all audit committees took that effort to go through that and do that. And I think that when we implement this standard, we need to start talking about training, both at the auditor level, at the audit committee level. And I'm not saying that the auditor should be training the audit committee, right? I'm saying that, we have to be able to be aware that this is a shift in thought process and how the communication should be held. Hopefully the communications are not significantly different, but if they are, okay, that's okay. It's more robust, and this is the world that we're in. This is what we're going to do, and it's going to help get both sides to understand and to talk about it right in the. It shouldn't be a surprise. Your CAMs that you put on the audit report shouldn't be coming out at the very end of your audit. It shouldn't be the day before you issue your audit. That's clear. So this should be a discussion all throughout the audit process.
Charles, this reminds me of a comment you made just a few moments ago about the fact that this is now a one-way communication, right? You're not having a conversation with the users of your audit report. So having that dialogue and a very robust and open dialogue between management, the audit committee, and the auditor is going to be necessary for you to be able to effectively draft this disclosure, so to minimize the risk that it's misunderstood.
Mm-hmm.
Well, in fact, these discussions should be happening in the planning phase of the audit, because if auditors and audit committees aren't thinking about this in the planning phase, I think that puts the audit at risk. In the planning phase, you should be looking at the big risks and what the appropriate audit responses are. In fact, I'm advising firms and audit committees to start thinking about this 1 year or 2 years before the implementation date. Start having those conversations now, because sometimes some of these issues might be difficult due to self-imposed problems that can be solved, such as multiple significant deficiencies or something like that, so that when this becomes effective, you've not only got stronger financial reporting, but guess what? You're not in that difficult situation of trying to deliberate one of these types of potential CAMs.
Okay, so I'm going to go with a very broad question here. Take this for what you will. But virtually every single policy is a matter of trade-offs. Nothing is free, even if it's just the printer ink that the policy is written upon. Now, what do you feel have been the trade-offs that come with this new expanded auditor's report, and why do these trade-offs make it worth it or not? Maybe we can start with Jeanette.
Well, we have a very robust economic analysis in our proposal and our re-proposal, which really tries to deal with things like information asymmetry and the impact on the audit process, et cetera. But the difficulties also that some auditors might have. And so we've got differential dates for implementation for large companies versus small companies to try to mitigate that. We've, I think, left plenty of lead time here, and certainly we've been talking about this for a very long time, so to help people get up to speed on it. But we also see significant potential benefits here, and so that is why the board is voting out, or has voted out, this proposal. That's why the board has spent so many years on this, and that's why people are doing this in other areas of the world. But having said that, I think it's going to be very important to do a post-implementation review so that we and academics and others can really study the benefits and the difficulties with the standard to see if adjustments need to be made or, further changes need to be put in place.
Charles, do you have any thoughts on what sort of trade-offs this represents for the audit community?
I'll start by saying this. I've been lucky enough to be around with the creation of the PCAOB, SOX, all around the time I had started in the profession, and now with this seismic change in the auditor's report. I think that's the definition of lucky. So it's. I guess the best way to put the trade-off is that right now everybody's concerned about what this means, what value this provides in the U.S. context. All the items I talked about before, litigation risk, trying to take professional judgment that comes in the auditing profession and trying to distill it down into the CAMs and trying to provide value to the investor so that they understand it without going so far that they go, my God, there's a textbook in the auditor's report, right? So all of those factors, I spoke about the potential dilution of the pass-fail message, but I think the overriding theme to me is, can we provide the value that an investor is looking for? Like the two gentlemen on my left spoke about. Can we provide that in the U.S. context? And that to me is a question that remains to be seen. And obviously the benefit is that this is something that investors have seemed to have asked for. So that post-implementation review is going to be very important, and to see how people have implemented it. I think those are, I'll discuss it more as risks than anything else. You know, the risks of what this means in the U.S. context, and also the risk of how people implement it, how auditors, audit committees, and management work together to implement it.
I could speak to some of the benefits. Investors are not a monolithic group, so depending on which investor you speak to, they have different views about what the benefits are. But certainly some investors believe there is some benefit to this information in making capital allocation decisions. This will add to the total mix of information that some investors will take a look at in making those decisions. In addition, it's also important for voting. Shareholders, it's best practice at public companies that shareholders have an annual ratification vote on the auditor. Also, it's best practice at public corporations have an annual election of directors. And so some investors believe that this information may be something, at least over time, and comparing it within industries and across firms, may provide some additional information to help them decide how to vote on the auditor ratification vote, as well as additional information to help them decide how to vote for the chair of the audit committee and the members of the audit committee. In addition, there's quite a bit of evidence that was provided to the PCAOB that this may actually enhance audit quality and improve the information that's provided in the financial statement. So most investors would like to see improved information. I mentioned earlier that some law firms have indicated their clients encourage them to improve their disclosures around CAMs, that would be advisable for them to do that. Some believe, and some of the input the PCAOB received was the belief that when there's accounting choices, that the CAMs may add pressure to companies to pick choices that are choices that their investors would like them to make. So those are some of the benefits that investors have identified. And again, it's not a monolithic group, so depending on which investor you talk to, they'll provide you with different benefits. But you said SEAM. I've seen the evidence and talked to a lot of investors over the last 10 years about this project, and there's overwhelming support for more information directly from the independent auditor about the audit. You can argue about what exactly that should be, but I think the PCAOB did a good job in structuring a disclosure from the auditor that gets us down the road towards what many investors have been asking for years.
Well, and I think if you look at try to understand the value of the information, I just look at the way the CAM is defined and what information the auditor is being asked to provide. And it just strikes me that if that information, if enough information is provided that's transparent, it should be able to help the users of the financial statements have a better understanding of the nature of the particular accounting that is affected by those particular CAMs, so to better understand maybe the risks involved in whether those particular financial statement items could have a misstatement, and a better appreciation for how the auditor responded to this. So qualitative information about the amounts and disclosures in the financial statements, but it's about it, not necessarily information that would normally come from management, if you will.
Yeah, and I think that we really focused on that issue of auditors revealing information that would otherwise be disclosed by management or should be, and I think we really worked on getting that definition appropriate so that in the U.S. environment, because where we do have that very strict sort of line, that in fact the auditor is reporting on items that the auditor found especially challenging, subjective, or complex, and in terms of auditor judgment, and that it relates to material accounts and disclosures, again, to reduce the risk of the auditor disclosing immaterial items. And I think if auditors and management are focused on these issues throughout the audit, it has to impact audit quality, I think. So I think that, Jeff, you mentioned audit quality impacts as well. I think we will see people focusing on the especially difficult areas throughout the entire audit, knowing that at the end there might be some disclosure of CAMs.
And before we move on, I just wanted to get back to something, Jeanette, that you had mentioned. It's about implementation. And I think what's very important in the implementation of the critical audit matters is to ensure that we have a monitoring process to look over what's happening with the large accelerated filers, and it should be very timely so that we understand whether there's any unintended consequences that may arise that were not contemplated, so that we can get on top of those issues quickly and ensure that we have a smooth transition to the full use of critical audit matters in the audit report.
You know, that's part of the trade-off, where we've got a lot of unknowns out there right now. And, you know, one of the things I was just thinking about is it possible that the disclosure of CAMs will somehow cast doubt on the auditor's opinion on the financial statements and make people feel less confident in that, right? That's a risk. You know, as you mentioned, Charles, there's risks that the profession's going to be facing as this thing rolls out, and, you know, potentially cost. And it's probably going to cost a little bit more money too, right?
And I think that goes back to the point also that investors are not a monolithic group, right? So education is going to be important. I'm harping on that point, but just, you know, at all levels, we are going to need some education so people read this and understand that, you're not evaluating this as one company has 10 CAMs versus one company has 3. So what does that mean? It may drive your decision-making process, but it should not be, in my mind, it should not be just a numerical decision. It's not just scorecard that you're looking at. So I think that there's some risks here, but education should help with that.
Well, and Tom, to your point about, gee, will this potentially make investors have less confidence in the audit? That's a very important point, because auditors have to be providing reasonable assurance, and they better be doing it now, but they better be doing it with this expanded auditor's report as well, because if we have a situation after a few years where investors start noticing that financial statements and companies are blowing up in those very areas where auditors reported critical audit matters, I think that would be a sign of a much deeper audit quality problem out there. So I think it's up to auditors to be sure that they're absolutely rock solid behind that pass-fail opinion, meaning the pass opinion, and really giving investors the confidence that that opinion is well supported, and then the investors can separately consider the information in the CAMs.
So this has been touched upon before, but I'd like to take a little bit of a deeper dive into this idea. Now, critics have said that the U.S. has a particular penchant for lawsuits compared to other countries, and there is a concern on the part of certain people that the CAMs might increase the potential for litigation on the part of CPA firms and the companies they serve. Now, is this increased risk simply one of those trade-offs that we talked about before, or is this concern not quite as large as reality would indicate? I guess maybe, Jen, we could start with you. What are your thoughts?
Thank you. Thanks for this easy one here. Well, it's kind of trying to look in your crystal ball and see what's going to happen with the critical audit matters, although the profession does have concerns about what will happen when critical audit matters are communicated in the auditor's report. Now, having said that, while a lot of firms have some concerns about that, most of the larger firms believe that it shouldn't stop the movement towards additional communication of the critical audit matters. And to go back to my prior point was that I think it's important for us to monitor what's happening, even with the liability, the legal liability space, what's happening there in the environment. So that's why a lot of I think a lot of comment letters are stressing the importance of monitoring what's happening so that we understand the benefits and the challenges that are coming along with the discussion of critical audit matters.
I guess as the other auditor, I'll jump in on this as well. In some of the SAG notes, it was clearly mentioned that people are concerned about this, and I think part of the reason for the concern is that it's valid from the framework that you don't know. We don't know right now how the market is going to react to it, and people have used terms like this is just a roadmap for litigators to try and hit you on some issues here. So in some of the transcripts, going through it, people have actually asked investor groups of saying, just very plainly, is this a money grab? Or is this a money grab for the auditor's wallet? That was the term that was used in the transcripts. And they even proposed the concept of, okay, let's assume that a legal safe harbor is possible. Okay, not that it's going to happen, but let's assume that a legal safe harbor is possible. Would you still want this information? And everybody said yes. Now, the value in that statement, while I make it, I understand that, people just want more information. But it gives me some hope from the perspective that, it really is dealing with the fact that the investing public wants to have more information, wants to understand what goes behind the pass-fail model. So that is valuable, but I got to say, I don't know what's going to happen.
Yeah, you have probably heard people talking about this particular thing more than, I would say, anybody else. What has generally been your reaction to these concerns regarding potential litigation exposure?
That's why we have 3 lawyers on the board and 1 CPA. I'm the CPA. Well, I think that certainly the board considered these matters very seriously, because it seems to come up very frequently anytime we're trying to change the financial reporting model or the auditing model. And again, I think the way we crafted the definition it should help, because we're not having the auditors, just discuss their general thoughts and feelings about the financial statements. There's clear criteria here, and these are material issues, and, the auditor should be working with management. But again, if the auditor is really doing sufficient work to support reasonable assurance over that opinion in the first place, that audit opinion and those financial statements should not be falling apart in these areas of critical audit matters. So it'll be a very important issue to track and study, as we go forward. But the board took these concerns very seriously.
So I'm going to ask, I guess for lack of a better term, a crystal ball issue. Forgive me here, but with all this talk about the new reporting model, the SEC, as had been mentioned before, must still ultimately approve this measure. This hasn't actually happened yet. While the Commission has traditionally backed measures from the PCAOB, few have been as controversial as this one. What are your thoughts on the chances that this standard will be approved as is, or what do you feel would be the chances, given what we know about this right now and what people's sentiments are, that it might be modified in some way? Thomas, would you like to start?
Well, I've lived through AS2 and AS5, so that was kind of controversial, the internal auditing standard. Well, it is a crystal ball. As you mentioned, I think the SEC ultimately has approved everything the board has adopted in final form. The board went through one heck of a process here over a significant amount of time. So, I personally would be surprised if the SEC didn't approve it, but, who knows? I know there are people out there, there's some significant comment from the corporate community that are worried about the potential negative impacts of this new disclosure. Again, it's just speculation, but...
And we should know the answer in a few weeks. And it is interesting to note that the SEC has gotten more comment letters on this PCAOB proposed rule than on any other. So
wow.
Okay, so much has been said over the years of the diminishing value of the audit report. And part of it is, as had been, the whole point of this, because of lack of information that investors had found relevant. Another part is also the increasing commoditization, it seemed, of the audit itself. The new report is very clearly meant to push back against this phenomena. And so I guess the first thing that I would wonder, this is a two-parter, is to what degree is this a problem unto itself, and to what degree is the expanded auditor's report addressing this? Maybe we can start with Charles.
Sure. All right. As an auditor, it won't surprise you to hear from me that I do not believe that the audit report should be a commodity. It should not be. I'm not going to say that people may not view it that way, but it should not be. I still think there's something to be said for the consistency of the overall report. Meaning, people shouldn't be coming up with different ways of saying reasonable assurance, and fairly stated under GAAP. But with that said, I think the intention of the PCAOB was not so much to have something to do with the diminishing value of the audit report, but rather that the language be bespoke, that it should not be boilerplate. So I think I'm just differentiating a little bit there, where I don't think the PCAOB was looking at this and saying the audit is now a commodity, we have to find a way to change that, but rather going deeper and saying, okay, what could add some value here? Now, whether as I had mentioned to both Jeanette and Jan before this, it's tough to rage against the machine when it's a done deal, right? So I'm not going to go backwards in time, but looking forward. The intention was truly that the language should be specific. You should provide value that an investor in some of the early discussions, investors have been asking for a better understanding of what keeps auditors up at night. Now, the language is not quite what the CAM is, and obviously that raises some tensions for me, saying, okay, they want to know what keeps me up at night. I just want to clarify there that while I don't believe that the value of the audit is diminished, I completely agree that we need the pass-fail model, and I'm glad to see that was retained. That adds some assurance to an investor, less interpretation on where the auditor landed. But the intention truly was to provide value in a very specific manner.
Right, and I think here in the U.S. we're in a good position because we're not the first one to do this, really. In the U.K. they've been doing this for over a year, and I think the benefits that they've seen, investors seem to be truly enamored with this new information that they have. And in fact, I believe that a lot of audit firms are not doing boilerplate, but they're almost upping one another to get the best critical audit matter discussion out there. So there's even prizes in the UK for the best audit reports. So that's something different. I don't know if that will happen here in the US, but so I think we, at least in the US, we do have some help along the way that we can look to looking internationally.
I agree with that. In the UK, they only have several years of experience, but certainly the experience to date is the information is becoming less standardized as they go forward with this. And I think I have all confidence and optimism that the auditing profession in the U.S. will not let this get to boilerplate as well. And there's a number of incentives for them not to do that in the U.S. I mentioned some of them earlier. They know the language of the standard indicates that it is supposed to be tailored. They know that investors are one of the main drivers behind this requirement. And if it ends up being boilerplate and investors no longer find any use for it, I think they will come back to the PCAOB at some later date and raise that concern. Another option they have is one I mentioned earlier, that if it ends up being boilerplate, that may have some impact on how they will vote on auditor ratification as well as on votes for the chairman and members of the audit committee. I think there's been a real growth in the interest of investors on the ratification vote. There isn't a lot of information to help them decide whether to vote yes or no. This could provide some more information, and I think if it ends up just being boilerplate, that may impact how investors are going to vote on that auditor ratification vote going forward.
Okay, so we have about 15 minutes left, and we have a lot of questions from the audience. And so why don't we start off with the one at the top of my pile? And so it's a two-parter, and it is, do you expect to see a reduction in financial restatements if CAMs are discussed and reported? And might you see a reduction in critical audit deficiencies that the PCAOB has reported? Would you like to start off?
I don't think those issues are related.
Yes.
So I can elaborate if you want, but we have a lot of questions.
I would agree with Jeanette there that I don't think that was the intention. I mean, certainly, I think all audit firms should be working towards that continuous improvement. That every year, every audit, your process gets better, your audit quality improves, and nobody's happy about having the inspectors find a deficiency in an audit that was completed. So, while I think that's the goal, I don't think that's the primary focus of this auditing standard.
But if there's an unintended consequence that suddenly people are focusing more on these high-risk issues, that would be fantastic, and I think we probably will see that in some pockets.
And I wouldn't mind that unintended consequence.
And there's certainly been input that the PCAOB has received indicating that may very well be the case, that there will be more dialogue, there will be more focus on these areas, and that could potentially improve audit quality and benefit all market participants.
Okay, so we have another one, and maybe actually, Jeff, you might be able to field it. With respect to critical audit matters, what impact do you expect there will be for an auditor if they do not disclose the same critical audit matters as their competitors in the same industry? And they were speaking in terms of legal liability, and they were also speaking of auditor retention and switching.
Well, I think any analysis of information, if you're a financial analyst, you generally focus on industries and you look over time. So as I think this requirement goes forward, there is going to be people focusing on particular industries and looking at the CAMs in those industries and comparing them. I think that's a natural thing that financial analysts do, and they're going to do it here as well. So to the extent there's differences, I think there'll be a greater focus on those differences. I mean, you can argue whether that's good or bad, but I think that's a likely result.
Well, I think we're also going to have an educational, process going on. This is the first time we're going to do it here in the not too distant future in the United States, and it's going to take a few years, I think, before the people gain confidence in being able to apply this. It's a good definition, but it's very it's a subjective definition. It's very principles oriented. So there may be some time before there some sort of consistency, I guess, kind of gets out there. We don't want to see boilerplate, but I think I would expect there'll be a movement towards more consistency over time.
All right, we actually have a question specifically addressed to you. Question for Jeanette. Comparisons have been made to audit reporting in the UK. However, unlike the UK FRC model, the PCAOB standard does not require disclosures of audit materiality level or testing thresholds. Some UK reports also disclose unrecorded audit differences. What is the likelihood that similar information will be required to be disclosed in the US?
Well, I think we looked at that when we were considering this proposal, and we set that aside for a lot of different reasons. But materiality is a very complex concept, and it's applied in a lot of different ways, depending on the circumstances of the company, and depending on the risk and the audit. And I think that you need an awful lot of context around a materiality number in order to make it meaningful. And so that was just too much for us to bite off. We might watch to see what's happening in the UK. There have been a few academic studies out now dealing with that data, so it's probably something to watch. But certainly we made the decision to separate that from this project.
Okay. And we have another one. It's, again, kind of a crystal ball question here. Thomas, you might be able to lend some insight into this. And they're asking, what impact will the new PCAOB board members have on this standard and upcoming standards, especially if there is a new chairman?
Well, that depends.
That's a good answer.
It depends first and foremost if the SEC sends it back to the PCAOB. Then you'll have some new people involved in that process. But I don't know is the right answer, I think.
So I have one card left. And is there any expected changes to the categorization / definition of CAMs in light of the proposed expanded auditor's report, and also will there be language guidance? I guess maybe just regardless of whether there will be guidance, maybe you could speak to that.
Well, I mean, where we are right now in the rulemaking process, unless SEC rejects this or sends it back to us for revision, it is what it is in the board's adopted release. I think you can probably expect some guidance at some point. I don't know what form that'll take, but I think it is going to be a learning process as we've talked. So yes, stay tuned for that.
Okay. So,
Well, and also, let's not forget the inspections process. Now, that's a few years down the road, but I would expect, as Jeanette said, they're going to look at post-implementation. We may see comments coming through the inspections process as well that may, in a certain sense, provide guidance to the profession as a whole. And I would think it's going to take no time before people start compiling these things and publishing compilations and comparisons out there. Not necessarily the PCAOB, but we'll see a lot of information, I think, pretty rapidly.
Good opportunity for the academics out there.
I will just add to that my preference on guidance is before the inspection process.
Yeah. I think that would be the intention.
But I found that the PCAOB forums, whether for the small business environment, broker-dealers, etc., while you might not have a clear-cut answer if you just ask the question, but the PCAOB staff has been helpful in working through some of those concepts and examples. Now, I don't think, while the answers might not be in writing, I think they can offer some insight there. So, I mean, we would certainly be very open to some of those opportunities as well, to listen in and to also see what the large accelerated filers are doing, but to be able to go to a forum or two and have a discussion, because, to be honest, a lot of the answers are it depends. But it's getting into some of the meat of that will help get this right.
I don't want to bait Jeanette to answer this as a question, but I just point out that if you recall back when we transitioned from AS2 to AS5 on internal control, it wasn't just the standard. The board had a whole process laid out to try to help the profession successfully implement that new standard. It was, like I said, it wasn't the standard. There was an inspection approach. There was other outreach. So there's different things the PCAOB can do to make that implementation go well.
And we've certainly put out guidance on difficult areas in the past, and I think this is rising right up there to the top.
And you mentioned AS2 and AS5, and from my perspective, though you may have received more letters on this than AS2 and AS5, that, in my view, was far more controversial than this project has been.
All right. Well, I am out of cards. And so I guess, is there anything else that any of you would like to go over? All right. And with that, I want to thank all of our distinguished panelists for coming over here tonight. And I want to thank all of you for coming up tonight as well. Thank you so much for all of your time.